United States Federal Reserve Chairman Ben Bernanke has called the Fed's easy money policy very necessary for the time being because the job markets remain weak and inflation remains too low for comfort. Asian markets rallied following his comments. Yoo Li-an reports.
Federal Reserve policymakers are increasingly calling for an end to the Fed's massive monetary stimulus program. According to minutes of the June meeting released on Wednesday, about half of the policymakers were in favor of tapering off the quantitative easing package by the year's end, 6 months earlier than Fed Chairman Ben Bernanke had in his timetable. Bernanke had said the Fed would likely slow the pace of its bond buying program and completely phase it out by mid-2014. With the Fed deeply divided on the timing, experts are saying there's now more doubt about when it will actually start. Financial markets had also expected the Fed would raise its short-term interest rate, which stands near zero, sooner than expected at the end of 2014. Easing such market fears on Wednesday, Bernanke said the Fed will keep its quantitative easing policies for the foreseeable future.
Currently, we have an unemployment rate of 7.6%, which I think, if anything, overstates the health of our labor markets, given participation rates and many other indicators of underemployment and long-term unemployment. On price stability, inflation is now about 1%, which is below our 2% objective. So both sides of our mandate, both the employment side and the inflation side, are saying that we need to be more accommodative.
He added that while the Fed is optimistic due to improvements in the housing sector and the automobile industry, it's still too early to say growth is firming, as federal spending cuts could slow growth. Yoo Li-an, Arirang News.